growing its way out of this debt crisis, I just don't think is a serious option. And I'm quite surprised that there hasn't been some shaking of confidence in the US itself among investors. But the fact it hasn't happened doesn't mean it's going to happen. This has been a great year for making money, notwithstanding the fact I'm not invested in NVIDIA for obvious reasons. I'm not invested in the Mag 7, but there have been much, much better performers in other parts of the world. And I think that outperformance will carry on. We will have more robots on the planet by 2050 than there are human beings, many more. And they will be doing everything. This is a revolution that's at the cusp of its huge expansion. So I would prefer to invest in that, to invest in the obvious stuff, the Mag 7, for instance. And I think there's a great opportunity.
Welcome to the Master Investor Podcast with me, Wilfred Frost, where we celebrate and learn from the success of the greatest investors, business leaders, and politicians in the world, giving you, our listeners, the edge. I am delighted to welcome back to the podcast the co-founder of the podcast, no less, Jim Mellon. Jim, it is great to see you again.
It's great to see you, Wilf. And I've been listening to a lot of your podcasts. They're really great. And it's I think you've got 14 in the can now, right? So it's becoming quite a series. Fantastic. Many congratulations.
Well, it's very kind of you to say. And it's so great to have you back, as is going to be the case regularly for our listeners, so we can learn from your extraordinary expertise when it comes to investing. And we can go straight back in to what we talked about last time, back in May. And I think it was fair to say your big concern then was the US debt pile. Of course, since then, it's worsened with the passage of the One Big Beautiful Bill. And yet, markets are higher, pretty much right at all-time highs since then. How do you balance those two events out?
Well, a bit like on the podcast, there's occasionally a delay in the sound. I think it's exactly the same in the market. There's a delay between the recognition of the problems particularly in the United States, and the analysis that we've made that basically this is all priced to perfection, and there's going to be a downturn. Now, I have to say that when we first spoke at Master Investor I guess it was in late March of this year, we were talking about a coming downturn in the market, and there was one. There was a 15% drawdown pretty quickly. And then in the most recent podcast that I did with you, which was a few months ago, I kept the same view, and you're right, the markets have gone up since then. But I also have to say that the US market has trailed European and Japanese, Chinese, and particularly the British market since then very considerably. Yeah. So if you look at since the end of March, the performance of the US market is up about 9%, including dividends. The UK is up nearly 20%, including dividends. Hong Kong is up 30-something%. China is up 20%. And the European markets are a spread, but if you take Germany as an example, it's up about 19%. So there's been a very clear lagging by the US market, and also there's been a depreciation of the US dollar.
And commodities, certain commodities have done even better, and I know you've recommended them in the past. So we'll come to that in a second. Just to pause a little bit though on the US debt picture, because Scott Bessent, the Treasury Secretary, announced in July what seemed like a little bit of clever short-term finessing, but a couple of months on, for now, seems to be working, when he said, we're going to reduce the issuance at the long end of the yield curve, 10, 20, 30-year bonds, and instead issue a lot more Treasury bills, the very short-term 1 and 2 year bills. What do you make of that? I mean, is that something that will buy them a little bit of breathing room, or a lot of breathing room, or not at all? And, could it work to give the US economy time to grow out of its problem?
All the indications that I have is that the US economy is pretty fragile at the moment, that the labor market is definitely softening, the housing market is softening quite considerably. And therefore, growth is not something that we can expect in the US in a strong way for the remainder of this year, and certainly not for next year. So growing its way out of this debt crisis, I just don't think is a serious option. And we've talked before about the fact that, notwithstanding Doge and the idea of cutting government expenditures and all this sort of stuff, the discretionary part of the US budget is not very big. And unless they take a big axe to Medicare, Medicaid, Social Security, and all those things that would cause literally riots in the street were they to really chop them, then the trajectory of US debt is only one way, and that's upwards. Because, as we've spoken before, you can't have an economy that's being taxed at 30%, but is spending 37 or 38% through the government. It's just unsustainable. And there's been you rightly point out that the most recent big budget bill has the opposite effect. It increases the deficit rather than... Now, I'm quite surprised, to be quite honest, that there hasn't been more of a crisis at this point. I'm quite surprised to see that, for instance, the Japanese haven't started to repatriate money in large quantities, and they're a very big creditor nation, as you know. And I'm quite surprised that there hasn't been some shaking of confidence in the US itself among investors. But the fact it hasn't happened doesn't mean it's going to happen. But I was very intrigued by listening to some of your previous speakers, who all have very, very good things to say, some of which I disagree with, but that, you have this range of people who are either uber optimistic or uber pessimistic, and a few somewhere in between. But generally speaking, I would say that this is absolutely not a time to invest in the United States. The problems are just going to get worse. And I don't think the economy is going to be able to grow its way out of the problem. I just don't see anything that's supporting the US economy other than an increase in certain government expenditures, notably defense.
Well, let's jump. I mean, you mentioned some of the episodes. So why don't we just jump into this to frame the bull-bear debate? And two segments we've pulled from past episodes. One, Jeremy Grantham for the bearish outlook, and one from Tom Lee recorded last week for the bullish outlook. Let's have a listen to them back to back, and then we can discuss it. What is your reflection then, Jeremy, when we see Nvidia today hit $4 trillion in market cap? Could it be similar to as you just mentioned, Amazon's slipping peak to trough 90% in the dot-com bubble? Is that possible with Nvidia?
It's not just possible. I don't think it's even merely probable. I think at the very least, it's highly probable. It is the guy selling the shovels at the peak of the gold rush, isn't it? This is one hell of a gold rush. It's a much, much bigger chunk of GDP being spent on this than was ever spent on digging gold.
I note, Jeremy, that in 2000, you predicted that the S&P 500 would be down by 2010. And obviously you had some short-term pain in that moment. For the broad market, do you say the same today? In the next decade, the S&P 500 will be lower than it is today?
Let's put it this way. I think it's quite likely. It's not, of course, certain. Weird and wonderful things happen. But in terms of a historian, I put a lot of weight on 1929. I think it's a wonderful example. It would be highly unlikely for this one to not be similar. And at or around several years in the future, 5, 10, even 15, it's highly likely from a historical point of view that you'll reach a point where you would rather have been in cash.
So that was Jeremy Grantham with the bearish view. And now for the bullish view, here's Tom Lee. Are we very early in a new bull market? But we've obviously had a extended bull market already.
Yeah, I think that's what confuses folks, because I would say generally we've been up since 2020. But we've had two 20% declines since. So in fact, this has been a really disrupted recovery since the 2020 lows. So I think we are in a new bull market because we just had another essentially wipeout that happened February to April this year. I do think that the bigger story arc is that there is a big surge in U.S. prime age workforce. That's the millennials and Gen Z. Plus, they're inheriting a lot of wealth over the next 20 years, which is going to be transformed into more equity exposure, less credit. And the third is that the U.S. is at the center of a lot of the major structural changes taking place, AI and now blockchain. But those are going to really boost financial sector, which could re-rate to like 40% of the S&P. And then, of course, healthcare could benefit. So I think there's a lot to be excited about. And 2035 sounds about right. That would be a 10-year bull run from here.
So, Jim, I have to say, I can listen to either episode, and I recommend people go back to the feed and find both episodes. And I listen to Grantham, and I'm incredibly bearish. I listen to Tom Lee, and I'm incredibly bullish. And I think the added interesting thing is it's very hard to argue with Tom Lee's track record over the last decade and with Grantham's over the last 5 decades. So they both have credibility in what they're saying, but I can't pick between them when I listen in full. I imagine which way you're going to go, but what's your conclusion between the two?
Well, okay. It's a great question, Wilf, and I thought they were riveting episodes. I completely agree. Go back and listen to them. In terms of Grantham, he has predicted a few busts, as well as, and some of them have been right, and some of them have just not materialized. And I imagine there has been pain points for him on some of those. But I've experienced that myself as well.
He acknowledges that in the episode, that he was
he does.
Far too early in a couple of them.
Actually, he's a very, very compelling individual. And Tom Lee, I take exception to some of the stuff he said, which I'll mention in a second. But the thing that most struck me about Tom Lee was he said, if you're, of a vintage era, which I definitely am, maybe not as vintage as Jeremy or Ray, but you need to put some specs on and imagine that you're 20 years old because the whole world has changed. And I think the same thing could have been said when I was closer to that sort of 20-year-old thing at the beginning of the internet, that you had to put on your 20-year-old specs to understand the implications of what was happening. You would, however, have lost a great deal of money, as Jeremy Grantham pointed out, if you'd been buying at the top of the internet bubble almost without regard for the fact that valuations were crazy, as in many cases they are today. So although I understand what Tom's saying about the fact that we're in a new kind of era, perhaps a new epoch, I think we have to pay attention to the very, very high prices of the stocks that are being highly recommended, including NVIDIA. But my view generally is that, do we need to make a decision as to whether we're in a bull market or a bear market, or do we just have to look for alternative investments that don't put us at risk by investing heavily in the United States? And I think that, as you know, I'm very bullish on the UK for a whole variety of reasons. I've been bullish on the emerging markets, bullish on China. And I think there's great value to be had in some of those areas. I think there's great value to be had in some commodities, not necessarily all of them. And there's great value to be had in some of the industries that will benefit from AI, but may not be part of the great bust that will inevitably come in AI in the relatively near future. We don't know when, but sure enough, there will be a bust. So I don't think we need to actually be completely US-centric and say it's either going up or it's going down. We can look, because we're international investors, we can look anywhere we want. And there are, if you are nimble, almost gladiatorial, you can and indeed will make money. And this has been a great year for making money.
The Master Investor Podcast is produced by Paradine Productions and Master Investor Podcast Limited in association with Birdlime Media. If you've enjoyed the podcast, please do subscribe on YouTube or click follow on your podcast platform, and then you'll be automatically notified each time a new episode drops. And please do leave us a review as well, and a 5-star rating if you're so inclined. We'll be back on Wednesday with Liz Truss.